Get this technology working. Look, thanks everybody. Look, Tim, thanks for the kind introduction. Look, really want to extend my thanks to the WA Mining Club for giving us the platform to, talk, I think essentially on behalf of the gold mining industry, which, is quite an interesting place to be, being in Western Australia, which is one of the gold capitals of the world, and being asked to come up and talk about gold's place in society. I think it's something that we all understand, but also something that I'm very happy to talk about. Everyone is excited about the energy transition metals like lithium, nickel, copper, so-called critical minerals like rare earths, gallium, germanium and niobium, things I've never heard of before the start of this year, have been stealing a lot of headlines off us as gold miners. But my real view is that the market should be commodity agnostic. What has been proven time and time again, regardless of the commodity you're mining, is that project quality, profitability, and the ability to grow your earnings on a per-share basis are really the key determinant for mining investors. So on that note, gold is certainly still relevant. In fact, we're in a fantastic market right now, particularly in Australia, and we are seeing some profitability return to the sector. It is, I think, a perfect market for a brand new, highly profitable top 20 Australian gold mine with tier 1 ESG credentials to enter the scene. And this was something that was really enforced to us. For the last 2 weeks, I've been in the US at a couple of the biggest gold mining conferences in the world. And what we're seeing is that discoveries of the size and scale we have at Bellevue are increasingly rare in Western countries in particular. And I'm excited to talk about our story and how we're doing things a little bit differently as we develop our project. But first, I'll have a few thoughts on gold. Here are some disclaimers available on our ASX platform, and probably one big disclaimer is that I'm not an economist, I'm a mining engineer, but I've worked in the gold industry for 20 plus years now, so I'll do my best to talk it through. And look, the title of this lunch and of the presentation was how gold was stealthily in vogue. And I've thought that for a long time, particularly in the Aussie space. Because the reality is that the gold price is almost $3,000 an ounce. It's hit and exceeded that point several times over the past few weeks, and it's currently trading at about $29.50 there or thereabouts. The record all-time high for gold in Aussie dollars, which was in May this year, is about $3,100 per ounce. So we're currently trading at sort of 95, 96% of all-time highs, which is where you want to be. Gold is still a massively relevant commodity, not just in WA, but globally. It's still a store of wealth. It's the world's third largest resources market, as you can see on this picture here. And it's only dwarfed by oil and iron ore in the commodity space. And, despite the recent increase in price, there are no critical minerals to be seen on this graph. Gold is big business in Australia. In 2022, it accounted for 37% of exploration spend, which is about $1.5 billion. Australia's gold industry is the second largest employer in the mining sector, so we directly employ 31,000 people, and we indirectly employ 240,000 Australians and their families. In WA, it's the second most valuable mineral commodity. It accounts for about 70% of Australia's output from Western Australia. And gold has maintained this position in the global economy, despite the recent Bitcoin experiment. It's a store of value, and what we're seeing now is that increasing US debt, coupled with a bold currency move in the developing world, is threatening to change the landscape, and I'll talk you through a bit of that in the coming slides. Now, there was mention of how Diggers and Dealers was a lithium conference, and we're in a lithium world. I did enjoy coming in here and hearing that the last lithium lunch had about 2/3 the people as the gold lunch has, so it means that the gold industry is still alive, so give yourself a round of applause. But look, before I get onto the macro stuff about gold, what I think one of the big drivers is of equity value is sentiment. And what we can see in these graphs, they've been kindly provided by Lion Select, is that there is a bifurcation on the market between lithium and gold, where the current backdrop of higher gold prices and lower lithium prices aren't being reflected in the share price of the corresponding equities. So, the lithium equities have eaten gold equities lunch despite these prevailing commodity trends. And all of us are probably familiar with the concept of reversion to the mean. That key corresponding concept in mining investment that's often ignored when sentiment's running hot is reversion to the commodity lead. And it's only just started to happen in lithium with recent pullbacks in price, but it's definitely been over-exaggerated in the gold space. What the market's failing to see is that gold is actually in a very good position right now as profitability is starting to expand, and there's also several macro tailwinds supporting the higher gold price for longer. For the past 50 years, there's been a very strong correlation between gold price and US debt, and US gold price usually drives a lot of sentiment too. We can see this from the graph on the left. The latest print of US debt, this is hot off the press, is about $33.1 trillion. At the current interest rates, the interest payments alone are over $1 trillion per annum, and this is all going to be repriced over the next few months at a higher interest rate. Total US debt rose by about $100 billion since it crossed that $33 trillion mark about a week ago. So it's $14.3 billion per day being added to the debt. Add in $3 billion a day of interest expenses on top of that. It's over $17 billion a day total being added. Meanwhile, deficit spending has become so large that the US is issuing $2 trillion in bonds over 6 months, which is driving interest rates higher. And simultaneously, the US is refinancing debt at current rates rather than the previous rates, which have more than doubled. So US debt and interest expense are on track for exponential growth, and even the most conservative of forecasts and bipartisan forecasts show that US debt is going to rise to over $50 billion over the next 10 years and potentially over $100 billion. Now, does anyone know who this gentleman on the left here is? It's Mr. Robert Friedland is his name, of Ivanhoe fame. He is the mining industry's equivalent to Sir Richard Branson. But to use a Perth reference, he's like Bill Beeman on methamphetamines. So in July this year, Robert stated that gold was a barbaric relic. No one should invest in it, and everyone should just think about copper. It's funny because at the time, the renowned gold bull Rick Rule said, Robert talks up whatever commodity Robert is promoting. If you had a gold company, gold would be the thing that you could not do without. Doesn't that sound like Bill Beeman? But as I mentioned, last week I was at the world's biggest gold conference in Colorado, and I was sat in on a panel discussion with Pierre Lassonde of the Lassonde Curve fame and Robert Friedland regarding a market outlook for gold. And in just 3 months after these barbaric relic comments, Friedland has now changed his tune on the place for gold. What was in focus for him was the recent BRICS summit that was held, the several trips that he's had to Saudi Arabia, who are now joining BRICS, and their push to create a global currency which is backed by gold to be an alternative to the once mighty US dollar. What was important was that there's now this clear collaboration between countries that are representing over 40% of the world's population, and the thought that these combined forces couldn't create an alternate currency was described in the room as the height of Western arrogance. This proposed currency, backed by gold rather than by government promises, would result in significant gold price upside. We're already seeing reserve banks starting to add. The gold held by reserve banks is now at the highest point in history, as you can see on the top right graph here. And this in itself is going to bring a new significant buyer into the gold market. And look, if anyone can change the sentiment on gold, it's someone like Robert Friedland. This picture here is one for the real gold bulls in the room. What it shows is that from 1990 through to 2023, the long-term gold to S&P 500 ratio averaged about 1.66 times and is currently trading at about 0.49 times. Every time it's traded at that level in the past, there's been a re-rate in gold. The market since the early 2000s has seen a rise in the big technology stocks, which has inflated that S&P 500 value. But now in this environment where high inflation is causing hard assets to lose real value, and the recent increase in central bank buying has seen a huge uplift, there's an increased likelihood for that ratio to start returning to trend, which certainly bodes well for some mean reversion. But look, as producers and participants in the market over here, something that we can't control is the price. And look, that is where the current environment helps. So seeing that gold price up there and signs that the gold price will be up there for longer is one good thing. But what we've had is a market where costs have also been rising. But after years of this uncertain market where the cost rose faster than the gold price, margins were compressed, there was this distinct lack of free cash flow for the sector, and this depressed equity values. And pleasingly, this seems to be abating across the sector. We're seeing gold prices stay at these high levels and be relatively stable here. Our friends from Argonaut provide these graphs, and what it shows you, if you look at that top right there, is that graph is the gold price is starting to go up while the cost base is starting to level out. And if you look at the times in the past where we had peaks in that margin, that's when we saw the peaks in the gold equities as well. You know, as I said, increased earnings are what truly drives stock valuations higher. So seeing this trend return and seeing these margins increasing, it really is great for the whole sector. You know, it brings interest, it brings investment, it attracts the capital to the junior end of the market, and that capital allows discovery of new projects. You know, these new projects can sometimes be thought of and developed a little bit of a different way, some with a focus on the future. And that's where I want to talk a little bit about the Bellevue story and what we're trying to do. So, for those that aren't familiar, at Bellevue we have a very high quality mine that we're building in the northern goldfields of Western Australia. It's a mine that has, you know, it's high grade, it's high margin, it's got long mine life, it's an underground mine, and look, we're really excited to be bringing it into production within the next quarter. You know, it's a really strong layout for an underground mine. So we have multiple mining areas available in year one, so we can hit our run rate quickly. We've drilled it a lot and defined a really high quality ore body, lots of drill hits, which I'll show you in a bit. And we're already at the underground development rates required to get steady state production. You know, this creates a fantastic platform for growth. You know, growth is the other thing that I talked about. Having this platform to expand off and grow from both a production, reserves, resources perspective is something that's really exciting for us. And in the meantime, with such a high quality project, what we've tried to do is really focus on the ESG trend and push sustainability to the forefront of what we do as a company. You know, a while ago we incorporated sustainability into our vision and purpose as a company. You know, we wanted to do right by the high quality ore body that we had. So we want to do it in the right way. So that's not just about creating value for shareholders, but it's about creating value for society, for our employees, and having tier 1 ESG credentials as a gold miner, and showing the world that gold can be green. So we'll give you a bit of a rundown. If you want to have a look at the screens, I'll do this in a bit of a 3D platform, but just for location-wise, here's Leinster in the northern goldfields of Western Australia. We're on a greenstone trend. It's a north-south trend called the Agnew-Wiluna Greenstone Belt. It's a pretty exciting address. We are surrounded by 5 to 10 million ounce gold systems. It shows that we've got the right rocks, the right geology to have these scale mines. You know, you look at the significant people, you know, we've got Agnew and Darlow, Bronzewing, Jundee. You know, these are assets that have attracted majors to the region. Bellevue sits right in the middle and was untouched for 20 years. And we're pretty excited to get a hold of it. You know, why was it untouched for 20 years? You know, it sort of slipped through the cracks of history, which is a pretty interesting story. It was a mine in the 80s and 90s. You know, it was a single lode mined underground through the middle here, a sort of sub-vertical lode. And it was shut in 1997 after the interpretation at the time was that it was faulted off to the south and they couldn't find it. I will refer to the crew that mined it in those days as the old timers. I do give apologies to Steve Norregard over here because he was there. So I'm not calling you an old timer, Steve, but just lack of a better term. At the time, a couple of years later, they were exploring in the region and they found the Cosmos mine up to the top right here, very close to Bellevue. And you know, for those that know, that were around 20 years ago, Cosmos was, you know, the #1 nickel mine in Western Australia for a period. And Bellevue was on the same tenement package. It was a big hole in the ground, and it was simply used by the Cosmos team as a place to put water. So Bellevue, from an gold exploration perspective, sat there idle for 20 years. And it wasn't until sort of the mid-teens it was spun out for a very small amount of money into a shell company. Got a hold by a couple of geos. So Steve Parsons is our founding managing director. Very good geologist who looked at it with a different geological lens. And I think Steve was here in 2020 talking about Bellevue, the discovery at the mining club. It's good to have the follow-up conversation when we're just about to hit production a few years later. But what was found was that there were actually parallel structures. So a hang wall structure called Tribune, a south and a north extent to Bellevue, flat dipping connector lodes called Viago, and then Deacon, which is a footwall lode which sits there untouched below surface. It's always good to have a look at this in 3D and sort of spin it around, because you can get an idea of the multiple stacked lodes. And I think what distinguishes Bellevue from some of the other well-known goldfields mines is that you're not just chasing one lens down to the centre of the earth. You can actually, you're chasing multiple lenses, over a decent strike. So again, you've got Tribune hanging wall, you've got Bellevue north and south, you've got flat dipping Viago, and then Deacon. And this Deacon, we've defined about 1.4 million ounces in there as we go. We have drilled it quite well, so we've drilled it from surface primarily before we went underground. We've now been underground doing grade control for a significant amount of time. You can see the development we've done in the middle there in the darker blue colour. So what this does is it gives us a huge amount of confidence in the mine plan that we've defined, and the early years of production, which are the most critical time. We've got the highest debt position, so we're very excited to get into it. And this is some of the hits that we're seeing as we go through. And look, I don't expect everyone to be able to read all the hits there, but developing Bellevue in the 2020s is like developing one of the premier Western Australian mines in the 1990s. It just sat there untouched. We got hits. Remember, just before Diggers, we got this 10 metres at 60 grams per tonne. The next hole we did was down here, which was 18 metres at 53, which is just down dip from it. And so what we're starting to see is these highly mineralised trends that hold together, and you've got grade, you've got thickness. And this is exactly what the old timers saw when they mined it back in the 80s and 90s. Was you get these big blowout areas. We're starting to see that in the drilling now, and this is going to be early in our mine life. We're on the Deacon footwall lode here. We're drilling this vigorously at the moment. These results are about 2 weeks old, but again, we're seeing the same thicknesses, the same widths as we get down there. It is not uncommon to see consistent hits in these mineralised trends above an ounce per tonne, and that we expect the ore body when we get in there will be wall to wall in our development drives. Bellevue South, another area that we're actually starting stoping in the next couple of weeks. We've done the first couple of levels of development here. Again, we're seeing fantastic grade through there. And in the orange, where we're actually mining all of this financial year, this block will come out. And I think importantly, there is a lot of room for growth from underground. That block I just put a square around then is this block here. It hits a fault that pushes it down about 120 metres. We've actually defined it on the other side of that block over a 300 metre long strike with 0 drill holes down here, because we don't have a place to drill it from a surface position. And again, these are the rocks that we're chasing. This isn't thin, low-grade stuff. This is thick and high-grade faces that are outperforming the block model. Go that way. So something that has been really successful, and one of the reasons that exploring in the 2020s is a lot better than 20 years ago, is that we have a lot of modern exploration techniques that we can use. So downhole electromagnetics has been a really powerful and really good way to find additional lodes here, and it's how essentially all of the structure at Bellevue was discovered. It's a high pyrrhotite ore body, so it's highly magnetic, and that you can chase up vectors through the downhole EM that you can get good reward from. I'll zoom in a little bit here back in the 3D, and you can see some of these downhole EM plates in some of these areas that we're chasing. That fault that I was talking about before is the dark blue one here. That box was essentially that Bellevue South. Here's the extension on the other side, and what you're seeing is that hundreds of metres of downstrike of that We've got a number of downhole EM plates that just simply haven't been followed up from surface because there's no place to drill them. Again, on Deacon, so this is that big Deacon ore body, sits in the footwall. Other side of that fault, we've got downhole EM that we haven't followed up. So, we're very confident in the mine plan at Bellevue. We've got 10 years from the jump, but definitely the ability to push that and get more in the future. From a mining perspective, for the miners in the room, I'll show you how the layout is in the first couple of years just to show the strength of the plan. Been underground for circa 3 and a bit years now, so set up significant infrastructure corridor, and we have the ability to go and mine 1, 2, 3, 4, 5 areas at a time in year 1, and that creates that flexibility and that de-risking in the mine plan. Year 2 is the same. We've got between 5 and 6 mining areas, and year 3 again. And all of the drilling that we've done, all the investment that's gone in, it's been about $180 million of investment gone into this mine to date, just on mining infrastructure, which really creates that platform for strong growth. And as I said before, we've got a 10-year mine life that's fully designed, fully ready to go, and it's a great place to be, but certainly not where we think it's going to stop. From a surface perspective, I always like these next 2 photos. This is this time last year, so 12 months ago. We just started the clearing and we had a big football field on site, and we were quite excited to get that done. And you look about a week and a half ago, this photo's from, and we're pretty much built. So we've had GR Engineering up there on site. They've done a fantastic job building a 1 million tonne per annum CIL plant. We believe it's got a lot of room for growth just in that footprint as well, but it's really pleasing to see here. We've got a commissioning team on site, and we're working with GRES to make sure that commissioning is a big success in coming weeks. But one thing I do want to talk about while I'm up here, we started the talk with the talk about lithium versus gold and everything. And one comment I want to make is, or ask is, can gold be green as well? We have, as I said before, gone out and are trying to do the right thing from the ESG perspective, and I'll talk about how that goes through to the actual gold bars that we're going to pour here. As I said, sustainability has been a big part of our business. Typically, as a developer in the mining space, what you do is you take the path of least resistance through to production, and then you worry about the soft stuff later. But then you're trying to improve off a hard base to improve, and you can only make sort of incremental improvements from there. What we've tried to do is really build this sustainability focus into the way we do things from a very early stage at Bellevue, and we're already seeing some good results from it. So, from a diversity perspective, we've got a really good, very varied workforce. We're sector leading in terms of gender diversity with 40% female participation across the company. We've got a modern native title agreement with the Chihuahua people who are native title owners. But what really is different about us is that we have a world-leading aspiration to achieve net zero emissions by 2026 for the Bellevue Gold project. 2026 is sticking your neck out there for sure. And look, we like to say we work very closely and very well with other companies, but we do like to have a joke with them. So we put up a graph. These are all public statements, but this is the friendly competition for net zero in mining. I do like to point out here that the Australian government is net zero by 2050. So if someone says they're going to be net zero by 2050, they're just complying with the government, who are obviously not the most efficient organisation out there. But it is good to see a bunch of like-minded companies pulling for net zero by the 2030s. But what I think is important is that the net zero by 2026 target that Bellevue set is actually something that is within the management tenure of the current management team at Bellevue. So it's something that we already have the people on board and the targets on board and the plan on board to be able to achieve that. We've actually put our money where our mouth is as well. So, our board a couple of years ago, we were actually the first company to do this, went out to shareholders and said we want to issue retention rights based on hitting those 2026 net zero targets. It was approved at the AGM back in 2021. And that has since filtered down to all staff. So every single one of the Bellevue staff who has joined the company between then and first gold bars is actually incentivised for that net zero target, and it's something that the workforce is quite passionate about. And how are we going to do it? Look, in mining, I think it's something that we are very comfortable with is a hierarchy of control. We use it in safety all of the time, and it's something that we're applying to carbon mitigation as well. We always like acronyms too, so our acronym is AERO, which is avoid, eliminate, reduce and offset. And we are going through that as we go through the development of our project. I'll take you through that journey in a little bit. So, the avoid part of AERO has really been focused on during the study phases. So this was, there were sort of 3 feasibility studies done on Bellevue, and each time the renewable energy penetration was increased through those phases. And you can see now right on the very bottom left there that we are forecast to be the lowest carbon intensity mine per ounce across the Australian landscape, and these are all just based off publicly stated figures and sustainability reports. On the eliminate front, so going to a high renewable energy power plant has really been the powerhouse of what we've done. Excuse the pun, but we are building with our partners Zenith Energy, we're building a world-leading power station, and we'll be targeting 80% renewable energy penetration when you average it across the year, and it'll be up to 90% in summer. Something we're doing a bit differently is we're actually designing it for engines off, so when the sun's shining, the wind's blowing, we'll be able to power our mine purely off renewable energy, and then we have a power station for backup. And if you have a look at this graph, it's not just because we're a new mine. There are actually almost brand new mines at the very other end of the spectrum to us on here. It is really a strategic decision that we made because of the quality of the project and the mine life that we have and our ESG strategy. The power station that we're building, it is a big capital commitment. It is a big thing to take on. We essentially have to build 4 different power stations to power the mine. We have wind and solar, plus a battery array, plus a backup thermal power station. And the reason that we can do this is because we've got significant mine life, we've got a supportive board, and we can work with companies like Zenith to be able to do it under a build, own, operate. It's an investment by them in our business as well. What this done on the elimination front has actually done a lot of work, a lot of the heavy lifting for us when it comes to our carbon emissions reduction, particularly from the installed electrical infrastructure. So what you can see there is the size of the bars on that bar chart, the amount of carbon that we were expecting to produce from different activities in the mine, and this was pre the 80% renewable. We were about 40% renewable at the time. And by going to 80%, the blue bars there is the reduction in carbon emissions just simply by putting in the high renewable energy power station, which has been pretty powerful, and doesn't mean we're not doing anything in the space to continue to eliminate, but it's obviously a big win when you can get that reduction through the power supply. A lot of the work that we're doing at the moment is on the R on reduce, and continuing to reduce as much as we can any carbon that is unnecessary coming from the business. So things that we're installing are things like ventilation on demand. So we're one of the first underground mines. We're actually the first to put a system in called Delta Vent, which is variable speed drives for the surface and underground fans. This will have RFID tags on people, on equipment, so it'll crank the fans up, it'll turn them down when people are in work areas, and it'll allow you to save power where, in the old days the fans were either on 100% or on 0%. So, it's good to have smart systems like that, and that system will grow as we build the mine. And we're also making decisions in terms of the infrastructure that we're putting in. So, we do have a future focus for expansion in the plant, but what we did really early on was we increased the size of the crushing circuit, and by having this extra capacity, it means that you have sprint capacity within that circuit so that you can crush more when you have more renewable energy available, and you can stop crushing when you're sort of in those shoulder periods in the mornings and evenings when the sun's not shining and the wind's not blowing. We can stop and do maintenance instead, and it's actually better for our operations. We've also partnered with a group called the EMC, and I'm not sure if people in the room are aware of the EMC, but It's a group of like-minded companies that are all banding together to increase electrification in mining. There are some big companies in there, and each one of them is culturally aligned and looking to make a difference. And it's not just make a difference for ourselves, it's to make a difference for the whole group and for the industry. So one thing that we do really well is collaborate, we try things, we share findings, so that if something works, it'll quickly make its way to other mine sites and become standard of what we do in the industry. So, we're working together to accelerate that progress towards zero carbon and zero particulate mines, and there's a lot of different work streams within EMC, from battery storage to vehicles and equipment to policy to everything that works in that carbon mitigation space, and it's something that we're really enjoying being a part of and getting a lot of value out of. As we build the project, as I said before, with Zenith, we're bringing partners on board that we want to work with and that are aligned to us in this journey. Our two major contracts on site, our biggest spends are underground mining through Develop and power through Zenith, and both companies also have a big focus on decarbonisation. What we've also done, you can see in the middle there, I talked earlier about the native title agreement that we signed, but both Develop and Zenith have created joint ventures with the Chual Aboriginal Corporation, and through those joint ventures, we've come up with initiatives to help decarbonise the Bellevue mine. And look, that is a good way to get into our hearts as a supplier, is to team up with Chual and create something that not only has an economic benefit, but has an ESG benefit as well. The last big piece on the reduce front is all about diesel equipment. This is a big piece of what we do as the EMC, and LVs are one thing, and I think what's interesting on this graph that you see here is that we've got 30 odd LVs on site, but for all the LVs, it's pretty much worth one loader and one truck. So it's really, solving the issue or solving the problem of how to electrify those heavy pieces of equipment that are really going to take us on that path, not just from net zero, but to real zero as a mining industry. And I'm pleased to say that a lot of the OEMs have that as their number one priority at the moment, and there are certainly a lot of vehicles that are partly electrified and will be fully electrified in a short amount of time. The last part, this is sort of the last resort, but obviously something that we will need to do is offset the tail. So, we will reduce emissions as far as, technologically and economically possible. But, in this day and age, there will be some hard to abate emissions that we'll need to offset. So we've already put together our criteria and started discussions on what that offset will look like. What we're looking for is local partners, WA only, areas within the mine that create a benefit for the local communities, and we're in a few discussions on that at the moment. What's the result of all this? Why do you do it? Well, look, the first one is that we actually have the opportunity to create a different product and a differentiated product. I think we've teamed up with the crew at ABC Refinery, and one thing that we talked about with them was that we didn't want our Bellevue Gold to just get mixed up with all the other gold bars and become an ABC gold bar. We wanted to work with them to create a product that was a Bellevue product that essentially you could get supply chain verification from, and you knew that was coming with tier 1 ESG credentials and net zero attached to it. And why would you do that? Well, is there a market for net zero gold production? Well, there actually isn't at the moment because nobody's doing it, but as Kevin Costner said, if you build it, they will come. So we're going to build it and market it and see how we get. But there is a potential for a premium product. When you think about the total gold market and you compare it to what we're going to be producing at Bellevue over a year, it's 0.17% of the global gold market. So, not all gold needs to be green, but Bellevue Gold is looking for the opportunity to essentially supply to what could be an interesting niche market. And we're asking the question, are 0.17% of customers willing to factor in, the ESG credentials into high-end items like jewellery, electronics, investments, bullion, coins. It's an answer that we hope the answer is yes to. And if you think about it, we're a 200,000 ounce per annum producer. We will be. For every $5 of premium that we get, that's worth $5 million per annum. So pretty significant. And the market's actually moving quickly. My Chief Sustainability Officer's standing up the back of the room there. He was very excited the other day when an ad came out from Apple saying that they were launching their first ever carbon neutral product. So they're now doing an Apple Watch that's carbon neutral, and they've made a commitment that all of their products will be carbon neutral by 2030. And as you know, there is gold in electronics, so maybe they will come and knock on Bellevue's door. But regardless of all this on the potential premium for gold and the increased revenue from it, that is one tangible benefit, potential tangible benefit from the ESG strategy that we have. But there's actually a lot more, and we're actually seeing a lot more on the ground already. Apart from being the right thing to do, by being a first mover in this space, what we've actually seen is that it's helped us in our attraction and retention of staff. So we've hired over 100 people in the last 12 months. And when you walk around site and you talk to people, what they say is one of the reasons they joined Bellevue is they really, they like gold mining, they like the quality of the mine, but they also really like the ESG focus that we have. We go up to site and do town halls and talk to the workforce. The questions that you get from the workforce, a lot of them are about, when are we doing the green gold? What's the progress on it? Because people talk about it and people are interested in it. From our investor group as well, there are some investor meetings where we don't talk a lot about ESG. There's some that it's all we talk about. And there are particular groups of investors that are very focused on it and they want to see us do it. The other thing that it does is actually protect us from future rises in the price of diesel, the future rises in the price of gas, and any future potential carbon taxes that the government will inevitably put on. So that's the end of that bit. Look, what I really wanted to say again is, thanks for the opportunity to come up and talk about gold. I think the turnout here, the fact that there's a couple of people from Argonaut in the room who just raised $300 million for De Grey, another gold development company today, and they're not stuck to their phones trying to raise it. They're out having a beer and having some lunch is a good sign that it's a healthy spot in the gold industry. But look, it's something that we're really excited about is bringing on a gold project in 2023 that has size, scale, growth opportunities, and we'll be in production in coming weeks. So watch this space. Thank you.
Thank you very much, Darren. It'd take more than that to keep the Argonaut people away from a nice lunch. Don't you worry. A couple of questions. I know some of these questions came in a few minutes ago, so I'm guessing that some of them you might have addressed already. But a few questions that have come in just around your net zero ambitions. So I might just string a couple together here. These are anonymous questions. The green and gold combo too got just two colours that go together. That got a bit of applause in the crowd, so that's always nice. If you just want to expand on how your pursuit of net zero might impact your production costs, and also the goal of net zero by 2026, someone says is inherently risky. What message does that send to investors?
Well, look, hopefully I answered the stuff on the net zero appetite for investors at the end, but people see the multiple advantages that it's giving us as a company, the fact that we've been able to recruit a workforce, the fact that we have a point of difference from other gold companies is something that they see. But look, at the end of the day, we're looking to this. We've got to make money at the end of the day. We have to make margin. That's what our shareholders want, and we can do it from a risk abatement. Lower risk on oil prices, on LNG prices, any potential carbon offsets, and in saying that, when you have a long life asset, you can actually take a bit of capital because you can amortise it over a longer amount. So the levelised cost of energy for power for our mine was something that we obviously put a lot of thought and effort into, and we were able to get that, so it was the same.
Thank you. The most popular or endorsed question this afternoon was around ESG. And I know you addressed this quite late in your presentation too, but perhaps you could tell us the biggest benefit that the company has seen to date from your approach to ESG.
100%. Look, it is 100% the workforce that we've been able to attract. You know, particularly I think the Gen Zers, or whatever you call the under 25s at the moment, are actually, you know, they've grown up in a world where, you know, that climate change is a real thing. It's a real focus of society. And, you know, this is why all of the interest is going to, you know, these lithium companies, these rare earth companies, is because they can go, oh, I can be part of this transition. I actually see this fact where, you know, your vehicles are going to be electrified, and you're going to need lithium for that. But, you know, people like working in gold. There's a lot of gold mines in West Australia. We're a much higher employer than the lithium and rare earths people. People challenge us as a management team to do the right thing, you know, not just in terms of making money for shareholders, but having a positive benefit on society as well. So as I said, like, you go to Bellevue now, you talk to the workforce, and they will say that one of the big reasons for joining the company is the ESG focus. And, you know, I think we sit here today, I could be corrected by someone on table 7, but we've probably got 2 or 3 available roles within Bellevue, within the entire company right now, which in a pretty competitive and tight labour market is a pretty good place to be.
All right, thank you. Apologies to those who submitted questions. We are just about out of time, so that might be it for questions for the time being. But Darren, I'll get you to stay there just for a moment, and Natalie Taylor's going to come back up to the stage for a more